When we look at these May stats, you're seeing the NASDAQ gained 9.56 month to date. That was its best monthly performance since November of 2023. Not all the sectors did well, though. Healthcare was a real laggard.
Right, Tessa, thanks so much for having me. Well, XLV ETF, right, underperformed the S&P 500 by 11% last month, which was the worst in its history going back to 1998.
Let's show that. Let's show the XLV now up on the chart. Okay, what are you looking at in terms of technical markers and where this might go from here?
Right, so a reason why we think there's could be mean reverting, number one, is that there could be a rotation, right? And so the rotation goes into, obviously, stocks in areas that have underperformed. So from a technical perspective, we want to see some support. And looking at the XLV, there's two areas of support we're looking at here. Number one, this spot here, just about 120, 130. This should be a straight line, but we can see that 2021, 22, and 23, XLV respected that. And if you go all the way back to here, we can actually go back to the great financial crisis low and draw up here. Again, it would hit the 2020 COVID low and come around here too. So right here, this would be a confluence of support, which is a potential area for XLV to rally from, both on an absolute and relative basis versus the S&P 500.
Okay, we'll clear this drawing. And now I want to pull up the chart of the XLP, which is consumer staples here. When you're looking at consumer staples, it was up 1.2% in May, the third worst laggard, but it was behind healthcare and it was behind real estate.
Right, so other underperformer, and actually most of that gain happened this past Friday. So we're talking about it then. Wow. And one of the reasons why I like this, even though it doesn't look like XLV, it looks actually better than it, right? And so we can tell, going back to here, that most of this consolidation over the last year or so is taking place above the former new all-time high. So that's encouraging to us. And again, if we're looking at rotation, XLP is one of these areas, and you can look at this whole spot as an area to potentially break out from, and a measured move will get us much higher. And so another ratio I like to look at, too, is XLY, consumer discretionary, versus XLP. On occasion, that gets very extended short term, which it is now. And again, I think that's going to give investors some reason to go into XLP.
Okay. And then the last chart that we want to look at this morning is a component of the XLP. You want to look at a Coca-Cola company. What is CCEP?
Yes.
Okay. What is it? And what are you looking at with the chart?
All because of the chart.
Okay.
Right, and so I try to put blinders on for our clients, and actually recommended this to our clients on Friday morning before this breakout. And as we can tell here, if there's going to be a bullish pattern in XLP, there's going to be areas like this as well underneath the surface. So CCEP I'm looking at here, right? There's actually two patterns involved, but the bigger one takes place here. This is the April low, right? This is a higher low here. This is a cup and handle pattern. So we take the measure move, gets us right up back to 101 would be the first target. So I like to look for areas like this. Outperforming also have trade setups like this from a technical basis.